all for being here after a lovely lunch in the sun. We're quite blessed to have some great weather. It's actually the second year in a row that we do. Fantastic. So another really riveting panel that we have for you here today. We're going to be talking about AML compliance for DeFi. I think a topic which not all conferences do speak about. I'm glad that we can have a little bit of tangible and granular topics here at this CVC. So without further ado, let's give a round of applause for our panelists. Thank you.
It all works? Perfect. Well, thanks for joining our panel. We have an exciting topic to discuss today. So maybe just to introduce the topic before I introduce our lovely panelists today. DeFi and AML, when you hear those two topics, they seem oceans apart at the first sight, because KYC and pseudonymity, how can you combine both, right? So there's a lot of discussions currently about how DeFi could contribute to money laundering, that things need to change. This is one of the things we will discuss, because obviously blockchain has a lot of opportunities for innovation. So maybe AML compliance could actually benefit from all the innovation present in the Web3 space. So we'll discuss these attempts, we'll discuss the hurdles, the opportunities, and what's best for that is to have two people representing very interesting projects in the area. We have Alison from Proof Space, we have Alexander Ray from Albus Protocol, then we have someone who has extensive AML and compliance knowledge. We have Chris Maggett here from SDX, and we have someone who will have to interact with those solutions and those innovations, Gary Kryliakov from Ovix Protocol. So let's jump maybe straight away into the first question, since I mentioned that DeFi and AML seem incompatible. Is it really so? Is it really so that DeFi as it exists now will not be able to be AML compliant? Or maybe, if we tweak it a bit, can we actually make it compliant? Who wants to jump on that more philosophical question first? I see two smiles. Alison.
Well, I think it's maybe important that we start off with an understanding of what is DeFi, right? How do we understand what is truly decentralized? And I think we always have to go back to the guidance that's provided to us by the FATF. It's one of the first sources of information. Of course, we always have to look at our national frameworks first to understand how the regulations apply. But understanding DeFi, the FATF has given us quite some guidance. They always come back to this concept of, do you have significant influence or control over a protocol? Do you have a whole team that is making decisions with regards to the smart contracts? Do you have a governance token that's quite centralized? Do you have a consensus mechanism that's very centralized? There are a lot of different elements, but one thing is sure is that there's a lot of marketing that comes along with DeFi, and there are a lot of decentralized finance services that really aren't quite that decentralized. So I think we have to keep that in mind. There's a lot of services out there that probably do fall under certain jurisdictions and the regulatory framework that applies.
That's a very useful clarification to start with. Now, can we still tweak? Okay, Alison.
Yeah, just to add to that, and thanks, Chris, that's a great framework to begin the conversation around what is DeFi. I would also add from the customer side, the end user side, what are the benefits of DeFi? Because one of the questions that I think really becomes a challenge as you layer on the very important regulatory compliance and AML and KYC onto DeFi protocols, if we recreate the exact same structures that we have in the legacy finance world, we're just using a different underlying technology. Is there a benefit there? And so the question that I like to start with is what's the value of DeFi? Why do we like it? What are we trying to achieve? And if we can think about what those values are, what the goal is, what the end users are benefiting from, that's really a benefit that's not money laundering and fraud, then how do we protect that in a way that's also regulatorily compliant? And I think that's a question that all of us who participate in this industry need to answer for ourselves. What is the value that we're delivering in a DeFi ecosystem? So I'm asking the question now, not answering it.
Yeah, also, well, from my perspective, we don't need to tweak DeFi at all. We need to make AML decentralized. We need to make the AML, we need to bring AML on chain. We need to make it possible to connect the DeFi world these AML standards. We need to provide the possibility for the customers to prove them against compliance rules on the DeFi protocols.
So it's more about the other side that needs to change,
Yes.
not DeFi.
Yes.
Okay.
I think the DeFi, how it works, it's fine. We don't need to change the idea of the DeFi or how it works. We need just to make it possible that AML procedures are works on chain and can be connected to the on-chain world.
Okay, that's an interesting, a different perspective, because just to build on what you just said and maybe inspire the last answer, one of the offers of DeFi, after all, is financial inclusion. You don't have anyone being set aside by a preliminary check on the identity. So maybe what is your take on that, Gary?
I think I agree with Alex in terms of DeFi in itself is already set to really change the way we think about using certain financial or services that are close to what we consider as traditional financial services. What is definitely not here yet is, AML tools, KYC tools, and other monitoring tools on-chain monitoring, perhaps even off-chain monitoring, if even possible, that are very user-friendly. Because my opinion, and from seeing behavior of thousands of people in DeFi that interact with our protocol or others, I don't think they really have a problem with going through certain checks or identifying themselves, but they do have a problem with existing solutions. And arguably, the solutions we have haven't been really been disrupted, or we haven't seen too much innovation, especially for Web3 use cases in the last 5 to 10 years. Or use cases that are close to dealing with Web3 users.
If I can just maybe add to that, when we think about financial inclusion, I think very often we understand that to mean a segment of the population that doesn't either geographically have access to banking accounts because they live in remote areas, but also they tend to be the segment of population that may be transacting at lower thresholds. And what we've seen so far in the DeFi space is that sometimes the costs of executing transactions can be quite prohibitive. And so the sort of smaller value transactions tend to be a bit less those that are actually transacted on the protocol. So to what extent is DeFi currently actually being used by that segment of population that it's intended to is maybe not quite there. Doesn't mean that we're not going there. But it does mean that those users that are mostly using it now, I think a study came out from the OECD not too long ago on that, it's about 2/3 institutional players. And so there is a lot of institutional money coming in. There's a lot of regulated players that are interested in the space. And in that sense, I think that there is quite some interest in bringing in a regulatory framework that could apply, maybe not a regulatory framework, but looking at elements to stabilize the DeFi services to increase consumer confidence and transparency with regards to the services, so that they do become a little bit more robust, a little bit more reliant, and then ultimately can be attractive and accessible to those who really do need it, who need to be included in the financial system.
That's a perfect transition to the next question, all about innovation. Are there any examples of projects working on how to bring innovation in the space that you want to mention? And you can mention your own project. Maybe else.
Yeah, so on the topic of innovation, I'm very excited about the potential for the decentralized identity industry to really change the dynamics of a lot of things, maybe everything online, but particularly the potential for doing compliance in a more decentralized, privacy-preserving way. And to give a concrete example of how this might work, I'll start by saying that when it comes to decentralized identity, those of us who live in Switzerland are fortunate that our government is really actively pursuing both legislation and technology that would allow for the issuance of a digital EID in a decentralized way. And by the way, I have to put in a plug for anyone here who's in Switzerland. There's an amazing organization called DDoS, the Decentralized Identity Association of Switzerland, which is really doing a lot of work in this area. And I'd love to talk more about it and encourage anyone interested to become a member. But anyway, the Swiss government is looking to issue a decentralized identity card. So the national identity card that says we're residents in Switzerland could be issued in a digital format directly, so in a peer-to-peer way, from the Swiss government to your identity wallet that's bound to your real-world identity and sits on your phone. And then what you could do with that decentralized identity card is show it to a DeFi provider, a bank, a cryptocurrency project of some kind, a custodian. And because they would trust the issuer, the Swiss government, it's a buzzword, but zero knowledge proof, they could have complete confidence that you, the holder of this decentralized identity credential, were a Swiss resident without you needing to share any of your personal information. So they wouldn't need to know that I'm Alison Fromm. They wouldn't need to know my birthday, my address, anything else about me. But using decentralized identity technology and a verifiable credential, they could have confidence that I was a Swiss resident. And that might be important from a KYC AML compliance perspective. And so this is an innovation that I'm really excited about, and I'm particularly excited about being in Switzerland because the government's focus is on this decentralized identity credential enabling ecosystems to grow around it so that card can be the basis of a more decentralized, privacy-preserving way for us to share information about our identities.
So it's about the trusted issuer of the credentials.
Yeah, and that is a key point because it's, talking about buzzwords, people sometimes think decentralized identity suddenly means, hey, with an on-chain identity, I don't need to do KYC anymore. It's a silver bullet. It solves all our compliance problems. And unfortunately, that's not true. It doesn't eliminate trust. The key, as you just so rightly pointed out, is that there's still a trusted issuer. So you can't get away from this issue of trust. But if you trust the issuer, and there can be all kinds of issuers, but if you can trust the issuer, then you can have a more privacy-preserving holder control over the data to enable innovation in the field of AML and KYC.
I think what's interesting about that is there are a lot of different players who are interested in playing a role in attestation, right? You have a lot of nonprofit associations that, for example, could validate your ID or that could complete your sanction screening, and then that could be added then to your profile. And there are a lot of crypto projects that we've seen during my time at MME operating in the decentralized space that are interested in building a bit of a permissioned garden whereby you have certain access to certain types of DeFi services once you've gotten to that level of accreditation. And that can be given, through a neutral third party that's decentralized.
Maybe, Gary, you can mention one of these projects.
We happen to work closely with Polygon and Polygon's decentralized identity solution called Polygon ID, which already offers a non-custodial wallet solution where you can store that ID, and we're building a couple of proof of concepts in that regard to at least show a proof of so-called humanity. The one issue I personally have with this is coming from banking, how do you show in a decentralized, trustless, ZK manner your source of income? Or, more advanced, how do you share more advanced information other than just your identity credentials? And this is something where I would love to see way more innovation, but I know also how hard it is, because depending on the jurisdiction, especially in the EU, and would love to hear everyone's take on this. I don't think the regulators will be fine with just saying, oh, this person exists, but the source of income, we can't verify it in a decentralized way.
And that's an interesting comparison between the public issuer and the private initiative here. And maybe then I'll go to Alex.
Yeah, can I just jump in on how would you verify a source of income in a decentralized way? And that's the whole idea behind the field of verifiable credentials within the decentralized identity industry. So a verifiable credential could be a national identity card. That's the example I started with. But the idea is that the technology is decentralized, so anyone can issue a credential. So I could get my employer to issue me a credential saying that I work for a particular company, and the credential also could say what my annual salary is. And then I could present that credential to my bank or to anyone who needed to verify that I was employed and I had a particular salary, and they could get that information about me in a secure and private way. And one of the tricks of zero-knowledge proofs is that the credential could say my specific salary amount, but the bank might need to know, is the salary above a certain threshold or below a certain threshold, probably below in my case. And the verifier could get that information from the credential without having any of the specific details. So there's a way to preserve the privacy. And the idea is that within my decentralized identity wallet, I can collect credentials issued by lots of different sources in a very peer-to-peer way. So maybe my employer issues me a credential. Maybe my university issues me a credential. Maybe this CVA conference issues me a credential for being here. And I can collect all of that information about my identity and share it in a privacy-preserving way.
Yeah. We are doing a similar thing. We are making it possible for customers to prove in a ZK way if they are compliant to some predefined rule sets, working as well with some trusted handlers which provide us the verifiable credentials. But there is a big issue with all of the self-sovereign identity solutions, because in case of some crime, the law enforcement agencies must be able to see the customer data. If the whole data belongs to me or to some customer in the wallet, in the phone or whatever, then if the customer is a bad guy, he can delete all of the identities. And in case of some investigation, the DeFi protocol will be not able to provide the identity to law enforcement. That's why we store all of the information encrypted with multiple keys to be able to provide, in case of investigation, the data to the law enforcement agencies.
Do you also use encryption, right? I think we discussed it.
Yes, we use threshold encryption. That means there are multiple keys which are needed to decrypt the data. One key is held by us as the protocol. Another one is held by Trusty, which we bootstrap but not control. And the Trusty is the Trusty can check if the law enforcement agencies are allowed to see the particular data. In case they are allowed to do that, we can combine the keys and decrypt the particular data and show them to the law enforcement agencies.
I see Alison wants to add on that.
I just wanted to respond to the point about, so I'm calling it decentralized identity industry. It's also called self-sovereign identity industry. The industry is a bit looking for the proper naming convention. But anyway, zero-knowledge proofs isn't the solution for everything. Sometimes somebody does need to have the data. The benefit of decentralized identity or self-sovereign identity, even when you have to provide all of the data to the verifying party, is that the verifying party doesn't need to rely on a third-party, big, centralized storehouse of data somewhere, or that all of your personal data is stored on a blockchain somewhere. The data still flows from the issuer peer-to-peer to the holder, and then directly from the holder to the verifier without a third-party intermediary sitting in the middle. And this really replicates the situation we have in the real world today, where you collect credentials in your wallet. They're issued peer-to-peer. The difference is that when you go to show your library card at your library is not calling out to a centralized API somewhere to check that the data on the library card is correct. They look at the card and they verify the information on the card from you physically presenting the card to that verifier. It's hard to replicate that in the digital internet world. So the solution that's developed in the Web 2 world is big centralized stores of data that the verifier can call out to and check, but those centralized stores of data lead to all the monitoring and surveillance and data privacy protection issues that we've had. So the benefit of self-sovereign identity is that you can still share the data, but in a decentralized, peer-to-peer way.
Yeah, of course, but it's only the half of the solution to be compliant. On one hand, you need to share the data, this how to disclose the personal data or whatever. On the other hand, you must be still able to open the data in case of some crime. That makes the solution compliant on both sides.
AML compliance officers need to store the data. I mean, I don't need the microphone. So at some point, we'll have some centralization point where we collect data. So there's clearly an area of innovation and a potential shortcoming there, because if the compliance officer stores the data before the credentials are issued, yes. I haven't looked at that side in a while, so can I jump to the other
point, and then I promise I'll stop talking. But the other benefit about storing the data and the need to store the data is that not everyone needs to store all the data. So the other benefit that's an innovation on decentralized verifiable credentials from real-world credentials is that the verifier can choose exactly which fields they want. So maybe they only need some of the information to be compliant, and then you can selectively disclose exactly which data you need. So it helps to cut down all of this massive data warehousing that we're doing because we need some of the data, but not all of it, in order to be compliant.
So if
I promise I'll stop now.
If I summarize all the things that were mentioned for now, is that we have plenty of areas for innovation on the AML part. It's less DeFi, it's more the solutions that will plug in with DeFi. But this sounds great, but any great project, when it goes to being used at the end and adoption, there may be some issues there. So I turn to Gary here. What do you think may be the problems at the end? If we have those perfect solutions to render DeFi compliant, could there still be some friction when it comes to users and the community, the reaction on their side?
Yeah, I think rightfully so, unfortunately. Most users in DeFi are extremely suspicious of everything that is calling themselves decentralized, but in essence might not be. Kind of being in between both worlds, knowing how compliance, AML, etc. works in the traditional financial world, and now the complete other side of the spectrum, where in DeFi, you could be talking to some penguin. At least their avatar is you have no clue who's behind that profile, behind that wallet or whatnot. And this could be an institutional counterparty, it could be some teenager, and anything in between. Speaking, for example, to even the institutional users that are fully enjoying, at least currently, their anonymity of sorts, they say, look, we will find a legal way to deal with DeFi. It will be probably a non-US jurisdiction if we talk about US institutions, and then we'll find a way to deal with DeFi with as low friction as possible, and that usually means they not gonna KYC themselves or gonna identify themselves, because why should they if everyone is anonymous or can be anonymous if they choose to be? So I see a lot of friction there, and I don't see much happening for now. I am personally extremely keen on self-sovereign identity, but I also know how long it might take for a general acceptance of that, unless the product is as simple as buying or minting an NFT, installing MetaMask, etc., which again is also arguably not the most simple way, the most simplest way. But account abstraction, for the ones that know what this is now becoming a big theme in the next months and years to come. So eventually, what we tend to agree with is we'll live in a world where you have the centralized DNA from all the KYC solutions that we all use, or maybe even AML solutions that we know and use, and then you will have a touch of this decentralized, fully self-sovereign technology merging, and then we'll have something in between, like a hybrid solution that kind of finds agreement with both people that or all counterparties that need a fairly compliant system and counterparties that, if they choose to remain fairly anonymous, want to do it. I don't know if that's going to be some sort of regulated custodian that can be proven as fairly decentralized, or for instance the solution that Alex is working on, and many others. And I think there's also money and knowledge and know-how going into that direction, but me personally, I'm a bit skeptical for now how fast we're going to see a solution that will work in the masses, because I just know how users think, and they're extremely skeptical about anything that especially is issued by the centralized entities such as the government or bigger custodians.
So there's no dream of a unified, compliant DeFi, according to you? I see the reaction.
Jump in. So,
Sure.
Yes, the current users, they are suspicious about to pass the KYC, about to lose the pseudonymity or whatever, but I see the mass adoption in compliance, because the common people, they don't care about, they pass the KYC every day. The common, the just normal people, not crypto punks or whatever, they will be happy to use the new technologies if they feel themselves safe. And my opinion, it's the way to mass adoption.
To bring mass adoption beyond the layer of degens currently hiding behind penguins. Chris, you wanted to add on that?
Yeah, it's a bit the same topic, or the same sort of line is looking at the positive side of bringing in some kind of sort of controls and frameworks into the DeFi space. Not only mass adoption, but I mean, I think there is certainly a segment of the population of the DeFi users that really are, you know, the hardcore, you know, original crypto punks that really want to have full anonymity and full control. And I think at our core, we all want to have that too, especially when we see everything that's happening on the retail CDBC side. But at the end of the day, we know that regulation is coming, and regulation in DeFi is just a matter of time. I think what we can do is try to, wherever we can, especially here in Switzerland, influence or educate, work with our regulators to try to help them think about regulation, not in terms of how to apply the existing framework to DeFi, but how to really understand the various elements of DeFi, and where there are elements that could be bolstered, that could be standardized to bring in more, you know, more security into the system. So, for example, we know that a lot of DeFi is based on open source code that's not audited, so we could bring in improvements there. We could have some standards with regards to the frequency and the transparency. We could have standards also with regards to whatever governance token, how centralized it is, or there are elements that you can introduce to sort of improve the process. And then on the AML KYC side, ultimately the reason why we need identity information is for sanction screening. There are ways to do that in a truly decentralized way. There are already some blockchain analytics firms that are working with some DeFi protocols. I think of Nota Bene now announcing that with Cake DeFi they've implemented some sanction screening and some basic identity measures. And so you can, you know, in a very decentralized and autonomous way or automatic way, at least do a screening of the address to identify the risk profile. And I, as a user, actually, I see that as a huge advantage. Like, even though I value anonymity, if I know that I'm going to walk away from a liquidity pool with tainted coins that I'll have a hard time exchanging, you know, when I get out of the DeFi space, then I may think twice. I may want to go to a DeFi platform where I know that my tokens will be a little bit cleaner when they come out, because at the very least, everything that's going in has been filtered to a certain extent. So I think there are some advantages there. There's a lot that's already being done, and certainly I think working with regulators to help them understand piecemeal what is DeFi, where are the real problems, and where can we bring more consumer protection in, would benefit us all in terms of adoption as well.
And here we focused a lot on the progress we could achieve in terms of technology and how to improve the technology. But when it comes to the regulator, because you mentioned the regulator, do you think that regulations as they exist currently could be a hurdle to a certain extent, or are they just fine and can be implemented if we add this new technological layer? What is your take on that? Who wants to jump in?
Yeah, I see I see multiple issues from the regulation perspective. For example, the cross-jurisdiction DeFi protocols. Let's say we have a DeFi protocol which is based in Switzerland, and one customer is in US and another one in China, and the law enforcement want to see the data. How the process will work, because all multiple jurisdictions are involved, and the DeFi protocol should decide somehow if they are allowed to open the data or not, and so on. In our thing, it's about the K-proofs. Are they actually compliant from the regulation perspective or not? That's unclear. It's gray area.
Alison, maybe.
I actually have lost sight of what the original question was.
The question is more, if we add this technological layer, are there maybe some aspects of the existing regulations that could nevertheless be a problem in finding a compliant DeFi solution?
Yeah, I'm not sure how much this is directly a problem of regulation, but we were talking about mass adoption, and I think one of the keys for mass adoption of any new technology is that it's easy. And so to the extent that we as an industry figure out how to be regulatorily compliant in a way that makes the user experience easy, we're only doing our industry a favor. And it's one of those interesting things, we talk a lot about privacy, but when you start asking people to put a price on how much they might be willing to pay to have a more private experience, or how much pain they might be willing to go through to have a more private experience, I mean, the adoption goes way down. We're so used to the model where we give up all of our privacy because we need an easy user experience. So I think that from thinking about the regulatory standpoint, the challenge that we all have to solve is how to incorporate those regulations in a very user-friendly way that stays true to the principles that real DeFi was meant to address. So we can all wish ourselves good luck with that.
So before I turn to the other side of the panel, if I understand correctly, we need a magic trick that makes it easy and makes AML easy. So this is really a magic trick that we need.
No, we just need decentralized identity. That's.
What is your take on that? Maybe Gary?
Yeah, that sounds great, and I'll be the first one to sign up for whatever will be both technologically and also from a regulatory perspective possible. I think, the Swiss government is probably one of the most advanced ones in the world, at least the one being in a very advanced stage thinking about this. Unfortunately, that doesn't holds true for most other jurisdictions. So I think this is a bit of a problem, and it just requires panels such as these, education, outreach, and essentially also for the industry to rather not to look too much. Especially from a DeFi perspective, I can say most DeFi protocols look more internally. They think they're competing against each other, but it's a drop in a bucket in terms of the size and volumes in comparison to traditional finance. So I think everyone needs to start looking a bit outward rather than inward, and start really talking and exchanging ideas. And only then I think we'll have a very healthy discussion, both with politicians, regulators, policymakers, and others. But yeah, unfortunately, or fortunately enough, we're so early in that process that there's still a lot of potential for anyone to come in and really disrupt that space. That's my opinion.
Maybe I'll specify the question for Chris. It inspired like a sub-question for you. Do you think that maybe what we would need is some sort of international standards, some international discussion on how we can render DeFi AML compliant, considering the transnational aspect of DeFi? I think
there needs to be coordination among regulators. Otherwise, they'll continue to be this concept of jurisdictional shopping. DeFi protocols will continue to try to just move around and try to anchor in where it's the most convenient. And likewise, at our sort of grassroots level, we do need to continue reaching out to regulators and helping them to see how, piecemealing, segregating the different elements of what DeFi means or what it represents, and addressing those particular issues as opposed to coming with a framework and trying to apply the traditional financial framework to DeFi is probably a better way to bring in the elements of safety and security that they are looking for in terms of reaching consumer protection.
I think in terms of timing, we are running to the end of the panel. So if I summarize all the inputs, we basically have plenty of potential for innovation in terms of technology, but we still have an ongoing debate that's only at its beginning when it comes to the regulator and how the regulations can integrate with these new technologies. Does anyone want to add on that? Or is it a good wrap-up of the discussion? Perfect. Thanks to all of you for the input, and thank you for your attention.
Thank you, Anne Grace.